Welcome to our speakers and the audience here as we continue day two of the ACT's Middle East Treasury Summit 2020. My name is Brian Shanahan and I will be facilitating this session. I am the founder and CEO of Informata and TermsCheck.com. Our focus is working capital improvement, and of course supply chain finance is becoming an increasingly important part of that agenda. In this session, we'll talk about unlocking liquidity through supply chain finance in association with Commercial Bank of Dubai. Now, before we get into questions, I'm just going to do a few housekeeping things. You'll see on your screen that there's a toolbar to the right of your screen if you want to ask questions. Please type in your questions, and then hopefully at the end of the session, we'll get to try and as many of those things as we can. Also, just from a best practice perspective, to inform you that we are actually recording this session. That also means that the recording will be available after this session is over. So if you miss something for 5 minutes or you want to share this with your colleagues, please do so afterwards. Now, after that, let's start with the introductions. Atif, I'll start with you, please.
Thank you so much, Brian. This is Atif Raza. I am Head of Sales and Advisory for Transaction Banking Products and Services from Commercial Bank of Dubai. I'm happy to be associated with the Commercial Bank of Dubai for the last 15 years. I'm also holding ICC UAE Banking Commission Vice Chair position, where it gives a great opportunity to play an important role towards trade financing as well as the transaction banking services. Thank you.
Ashish?
Hello everyone, good afternoon. This is Ashish Krishna, and I'm delighted to be here sharing my views with all of you on supply chain financing. So just to give you a background, I work with Americana Group, have been with the group for the last 4 years, and currently I lead the treasury function for the group across the 12 to 13 countries of its presence in the Middle East region. Prior to this, I was working with Reckitt Benckiser, looking after their 3 subsidiaries that they have in India. So as my current role, I am instrumental in centralizing the treasury and bringing in the related efficiencies that come with the centralization. Just to give you a bit of a background of Americana Group, it is one of the leading food and restaurants group in the MENA region. We have 2 divisions. From the restaurant side, franchises like FC, Hardee's, and on the food side, we manufacture under brand names like Americana, California Garden, etc. So that's a brief about me.
Abhishek.
Thanks, Brian. Good afternoon, everybody. So this is Abhishek Mundra. I'm the Group CFO for Choitram Group. I handle their interests in the region, which includes other countries like Bahrain, Qatar, and Oman, apart from UAE, of course. Been with the group for 5 years, and prior to that, I've handled some leadership positions in finance in Kuwait and in India as well. Been in the region for 12 years and overall 22 years in the profession. I'm chartered accountant by education from India. And a little bit about Choitram Group. So we are into, all of you know about probably Choitram as a retailer, but we are also having a lot of interest in the distribution business, in the commerce side of the business, B2B. We handle some prominent brands, including Rainbow in the region. So looking forward to this session for the rest of the session with all of you.
Thank you.
And Yusaf.
Good afternoon. My name is Yusaf Ali, CFO for Emircom Group, wholly owned subsidiary of Alnoise Investments. I've been associated with Emircom for the last 15 years out of my 22 years tenure in UAE. To speak more about Emircom, we are a leading partner to many heavyweights in ICT segments, most notably Cisco, Dell, Oracle, and we are contributing to a major portion of their business in both the UAE and KSA. And I'm a chartered accountant by profession, and that's all about myself in brief.
Thank you. Atif, I'll start with a question for you. Supply chain finance, my understanding is fairly new in the Middle East. Well, why is that?
Brian, thank you. That's a very, very interesting question. I would say I'm happy to have 3 ambassadors of supply chain finance with me in this forum, where together we are trying to bring in this new technique of financing open account trade to this part of the world. yes, you're absolutely right. Traditionally, the traditional trade ways of LCs and getting collection document business have always been there. But I think we are keeping pace with the mandate being given to us by our organizations, as well as the mandate being given to us by the rulers of UAE, where we want to make it a paperless environment, and we want to make a digital default digital country, and that's the same mandate which we are taking forward. And I hope supply chain finance, with the help of digitization, is more doable. The benefit really came from VAT implementation. So since the VAT got implemented, and there was a lot of traction for supply chain finance after the sanctity of invoices. Now it is easy to do a recon of invoices, and accordingly, the supply chain finance is taking a lot of traction. So I think the future is there for supply chain finance in Middle East.
No, thanks for that. Abhishek, from the point of view of a large corporate, how does this unlock liquidity for you guys?
Brian, I won't say that it only unlocks liquidity for us. If we are managing this program, the most important feature of this program would be that it also unlocks liquidity for your partners. In this case, it would be typically a supplier or a medium supplier, medium-sized supplier, or typically I would say this would target to an MSME kind of an audience. So, for example, in our case, we have got approximately 500 relevant suppliers, out of which I would see this as a good program where I can offer this program to my MSME partners, whose either the borrowing cost will be very high, or their borrowing capability will be limited. Especially in the today's environment of COVID environment, a lot of banks are hesitant to lend to a few segments of the corporate clients. And in which case, if I can leverage my balance sheet or my capability to get a good financing for them at an attractive price, which will definitely be lower than their current price, it definitely gives them a good reason for doing business with Choitram. One more additional reason for doing business with Choitram, or for that matter, any partner who is on this program. So one is liquidity, freeing up not only for Choitram, I would say it's more towards a partner who are going to onboard with us in this. That's one. Second is, Atif just briefly spoke about the digitization of this, the benefits which comes out of bringing this all onto a digital platform. And when you bring this all in digital platform, what it does is it brings in a lot of assurity, it brings in a lot of transparency, and it brings a lot of conformity to the process. So, for example, today if a supplier is dealing with me, he knows that he has got an X credit period and he is going to get his payment after, let's say, 30 days. But he's not sure whether he'll get it on the 30th day. Maybe he gets it on the 33rd day, or maybe on the 35th day, and that too after making a call. Now, with this program, what happens is that he gets a confirmed payment on the 30th morning. He doesn't have to ask any questions to anybody, including myself. He just goes to his side of the portal, he just clicks on a button, and he gets his payment banked, finish. So, so it's a mixture of liquidity freeing up, it's a mixture of conformity of the payments, it's a less hassle, less administrative cost, and so on and so forth. So I would say it should not be seen only as a liquidity driven initiative. It is probably an ecosystem in itself, and going forward, as and when more people are going to be aware of it, this is going to be the way of doing business. That's what I feel going forward.
And Yusaf, commonly it's known that lack of access to trade finance is a barrier for SMEs making the most of their own investments and their own capital. So, how does SCF benefit SMEs to unlock the cash that might be stuck in their own supply chains?
Thanks, Brian, for giving me the opportunity to answer this question. See, we all know that SME is the most neglected sector in most of the countries, not only in UAE or KSA. If you look at the growth after year 28 crisis, global crisis, you can see the trade finance as an industry is changing totally. There have been many new developments, more complex regulatory environment is in place now. Banks are stringent on when it comes to KYC due to AML, and we have been witnessing slow global trade growth also. So finally, with our COVID, what happens now is that the cases, genuine cases which deserve the merit to get the finance is also getting rejected because of this. So we all know that the SME class is riskier than general population, if you see. And if you ask this question to any Atif or any other panel or anyone in the audience to describe the reason why they are not extending the trade finance to SMEs, the simple answer would be low credit rating, or they would say insufficient balance sheet, and other credit worthiness issue, capital constraints. It could be many reasons. They can give many grounds for rejecting those. So having said this, I'm coming to the answer of how this supply chain is going to benefit SMEs. Let me take an example of my company, the industry I am in, IT infrastructure industry I work for. Being we are a trusted partner for government, we undertake large projects ranging from 5 million to 200 million single orders. So when we undertake this, we give SMEs our cabling services, or passive or ELB works, I would say, or civil works when it comes to installation, implementation of. Because we need to focus on the active portion of the scope. We cannot keep adding those resources for this, or we cannot make another division, exclusive division for the civil works. So we depend on SMEs, and we don't have liberty to cherry pick the scope from the larger project. So we need to do end to end the project. So we need to we believe everyone has their own core value. So it's offload the cost on Emircom, and as it is project based, so we don't need to carry the cost throughout. So we depend on SMEs. So we don't have time to govern, manage this kind of activities. So we outsource this activity. Cost involved will be very less if we go to this SMEs. So whenever I ask with any SME team members or negotiating with them, the terms with them, the main issue they say is payment, cash flow, nothing else. Most of them are vanishing from the market because not because of the profit, because of the cash flow. You see them this year, next year you will not get to see them. So these small companies cannot withstand to uncertainty, complexity, or what you call ambiguity for obtaining finance. So they don't have access to easy finance. So this SCF can roll out. They can the cost of funds will be more will be less, and as they are evaluated on the basis of not on their balance sheet, but will be on the basis of anchors or corporates risk profile. So if they use SCF offered by us, cost of fund is going to be lesser than the conventional loan for them. So because of they are borrowing at the rate of ours. So as such, SME suppliers they can turn the receivables to cash immediately. That's one of the benefit they get. And also we can consider this as a win-win situation wherein supplier will receive a prompt payment without the pressurizing on our working capital, and they can also, if they want, they can also request for an early payment, and which will give them a factor of kind of certainty, as they don't know that what is in the future it is going to hold.
Thank you. Ashish, I think most people would agree we live in a strange year, do we not, between the global pandemic and then from a Middle Eastern perspective, throw in, historically low oil prices. And there's lots of, stuff in the press where that's putting a lot of pressure on SMEs to free up cash in their business. How do you believe that supply chain finance can contribute to actually easing some of that pain?
Yeah, so I think this has been, as our colleagues Yusuf and Shubham just mentioned, I mean, supply chain financing is just going to help their side of the business. So I think, see, basically, supply chain financing is there with the basic principle of letting our suppliers get the payment on day zero, right? So that way, to answer your question, yes, it definitely is relevant in these circumstances when the liquidity is drying up. And as our colleagues mentioned, even Atif mentioned that the liquidity is drying up, especially for smaller businesses. Banks are more reluctant to lend to these sort of segments. Then with even to the larger clients, I think the banks have become more vigilant given whatever the economy has gone through. And so if you look at it in short, with the basic objective of supply chain financing being there to help you get payment on day zero, it definitely helps the SMEs. Now, another point I just wanted to mention is that the region is also not very well known in making payments on due date, right? So, and these two crises coming up in the region, I think I'm sure these problems would have just got more aggravated, right? So, I think in these circumstances, having a bank as an intermediary helping you do a supply chain uh, program can also, I mean, obviously it would help you get give some certainty on the due date, but it also de-risks those concerns of delays and of payment not happening, because there is now also a bank who would be who to whom the customer would be liable to, right? So in a way, I think this is a great program, besides all the benefits that our colleagues have mentioned in terms of increasing the cash being available on day zero, but also if you look at the concern of delays that are happening, I think with the banks coming in, it would just help it. It would just help the SMEs or even big clients to that matter.
Okay,
So to answer your question, yes, SCF is definitely relevant, and even more so in the circumstances that we are undergoing through
thank
right
you.
now.
Atif, you know, what's been the role from your perspective of the ICC in standardizing different techniques to use supply chain finance in the region?
Thank you, Brian. That's a very, very important question, because when we talk about standardization and we talk about trade finance being accepted all over the world, the role of International Chamber of Commerce is pivotal for that. International Chamber of Commerce govern the entire world with the help of national committees, then the banking commissions, and all the Chamber of Commerce of around the world are supporting International Chamber of Commerce to support WTO initiative and to support the free trade initiatives, as well as to make standardized approach. Uniform custom practices are being launched for ILCs, UCRs, URDGs. Many rules are being universally accepted. So these all rules were there for trade, which is not open account. So now open account trade, when it got a lot of traction. So a few years back, interestingly, I am associated with the International Chamber of Commerce, being a vice chair of ICC UAE. So we sat on in a technical task force, and we started looking into the supply chain finance techniques, so that we can come up with a standardized definition of all the techniques which can be used. So we got support from BAFT, which is Bankers Association. We took support from ITFA, which is International Trade for Forfeiting. We took support from EBA, from European Banking Association. We took support from FCI for which talks about Factors Chain International, and together we came up with a paper comprising of 100 plus pages to define the standardized. I will just give a pause of this noise. Okay, so we defined standardized techniques which can be used for supply chain finance. So now this has been the first major step being taken by us through the International Chamber of Commerce Forum, and the next step is to come up with some uniform customs and uniform acceptable practices which can be adopted by all the banks around the world, so that the world can take care of the international open account trade. There's a huge scope of banks need to be played in the financing of open account trade, because when a win-win situation comes where an anchor or large corporate is being facilitated by the bank and the bank is taking care of SMEs, and it goes without saying, when SMEs play a major role in any economy, they are the major contributor to the GDP. So we look forward that the first good step has been taken, and next future steps are there around the corner.
Okay, thank you. Yusaf, do you think that supply chain finance programs cater well to the corporate social responsibilities of large corporates towards SMEs?
To answer this question, first of all, we need to decide whether this is a responsibility or corporate social duty. We cannot just name this as a responsibility, but also a duty, an obligation, or a kind of moral commitment, I would say, which a corporate like us expected to perform. So SME, and startups are facing significant, solvency risk. So severe consequences from bankers or financiers with increased interest and penalties and fines or whatever. So neglecting them is as good as eliminating them. So eliminating them means as SMEs, like we are doing deforestation, we do for the sake of building the concrete building. So if you look at the existence of, as Mr. Atif said, existence of SME is essential in our ecosystem in UAE market in particular, because 94% of total number of companies operating in the country belongs to SME, and SME provides jobs more than 86% of the private sector's workforce. So this is contributing to overall country's growth and ecosystem. So supporting them actually like helping us directly or indirectly getting our job done in a cost-effective way, and we can improve our margin also. So yes, this supply chain finance can play, I would say, a huge role for overcoming this obstacle faced by them actually. So SCF is actually going, as Mr. Atif mentioned, out of the box, making availability of the funds for everyone, and this is, I would say, this is one of the most trusted program. It's going to be with the implementation of e-invoicing or web portal, e-KYC, and all these things. So, if you look at at the moment, they are using a kind of traditional financing like invoice discounting or factoring, for the as working capital approach. But there is, you can see there is a competition between buyer and seller in these programs. So buyer needs their a lengthy or prolonged period, and the supplier also want earlier payment. So in this SCF, if you see, we can say this is an agreement between buyer, then finance institution and seller. So this supplier can easily request with the buyer's bank for an early payment, get paid with by deducting the interest portion, and this interest is more likely less than interest they for a traditional financing. So most of the, if you look at most of the SME owner, their main issue is like they are not highly proficient in cash management. When it comes to, they don't have a system in place or resource in place to mitigate the cash flow risk, and they face a lot of problem to understand the lengthy and complicated loan procedures. So then getting a loan from a financial institutes for SME is very rigorous, and they wanted to see 3 years balance sheet, business history, then track records, business plan, pipeline. All these things, they don't have it, and they don't have a credit history to present. They'll go to all the details, including the family details, and end of the day, they don't actually make it. So this is very important. They are, as Atif said, they are big contributors to economy moving. So we can also see that the banks which are lending to SMEs are very negligible. It's only like an amount of 2 or 5% of the total loan lent total. So I think we need
That's
to
great.
improve, and this is one of the best program we can do it. Yeah.
That's great.
Thank you. Abhishek, one for you. Yeah. Lots of people say that supply chain finance very neatly complements supply chain management in general. Try and help our audience to see how does that work?
Thanks, Brian. When you speak about supply chain management, what you generally understand traditionally and otherwise as well is about how do you manage your inventories, how do you manage your ordering, how do you manage efficiently, how do you manage to order efficiently so that you optimize your inventory cost, inventory holding cost, your time, what it takes to transit between your supplier's port to your port. And how do you efficiently then store it in the least possible time, and also then to make it available to your customers in the least possible time. So it's a speed to the trade, which you talk about when you talk about SCM in general. And what you obviously have to do is to optimize cost across all the portions or the parts of all these cost pockets. So whether it is sea freight, whether it is your inland transport cost, whether it is warehousing storage cost, and so on and so forth. So there are so many things you need to worry about, and rightfully so, you need to do that so as to, so that you can say that you are doing your SCM or supply chain management properly. Now, when you do all this, one part which gets missed out is the payment part, which is probably the end to the means. And you can do everything right, but if you don't have your payment mechanism in place, and it's about not about you, it's about both the parties. So you might think that I'm doing my payment on time or I'm doing my payment efficiently, but maybe it is still not efficient as far as your other counterpart is concerned. So it's about bilateral kind of an arrangement. And in that perspective, I would say a supply chain finance comes into play, wherein it very beautifully complements the supply chain management aspect and gives it a completeness. You can do everything else right and not doing payment right, and vice versa. So this probably, is a cherry on the cake kind of a thing. And I would even go to the extent of saying that supply chain finance is going to be highly revolutionary going forward. And my friend Yusaf just spoke about the contribution of MSME in terms of 94% of the business in this part of the world is belonging to MSME segment, and which probably employs 85% of the workforce. And if that particular segment or community is not well taken care of, you can't do business in isolation, right? I mean, it's a coupled world. And if you are doing good and the big is becoming bigger and the smalls are not taken care of, you might eventually suffer. I mean, all of us will suffer. Banks will suffer if they don't get good clientele, if their diversification is not in place, and if they only have handful of big and good clients, but it's not reaching out to the larger country, which is 84-85% of the trade. They also will probably find difficult to throw the good money to the good client all the time. They will probably end up throwing good money to the bad clients eventually. So this program beautifully, takes the risks out of the trade finance from the bank's perspective. For the participating client, like for example, if I am participating, it takes, I have nothing to lose. In fact, it helps me in managing my suppliers better. It helps me in managing my cost better. It helps me in managing my pricing with my supplier better. As far as the supplier is concerned, it's a win-win for him. He is laughing all the way to the bank, because if he has no access to the fund, otherwise, CBD may not probably entertain them otherwise, or any other bank for that matter. But because it is through a tripartite or a three-way arrangement, they come into the picture, and they probably have an equal footing in terms of ease of doing business or just to be able to do business. So it just probably stitches all the parties so well together that I can only imagine that more and more people is going to kind of take liking to these programs and probably incorporate that in near future. So just to summarize, supply chain finance is a complement or a complementary product to help your supply chain management overall, brings your cost down, gets the relationship between your supplier in a much stronger footing. Your supplier will find, if he has to choose between X and Y, And if you have a supply chain finance program offered to them, 99% out of the time, he would probably choose you at a better pricing. So you get better pricing and a preferential treatment, and you can also proudly say that, okay, no, I have a fully digitalized, transparent online payment program in place, and that becomes probably your a kind of a, you're selling kind of an opportunity as well. So I mean, like, so if that answers, yeah.
No, thank you, thank you, Ashish. Probably following on from that a very insightful answer. People now are very often talk about this whole concept of a financial ecosystem. Yeah? In your opinion, how does supply chain finance contribute to that ecosystem?
Thanks, Brian. I think that's an interesting question. So if you look at it, I think what is supply chain financing doing exactly? It basically, a supplier wants the funds early. He's not able to get the financing from the bank. He approaches his customer via the customer's bank and gets some sort of financing, right? So what exactly is happening? So the bank is basically lending to the giving the payment upfront to the supplier on behalf of customer's credentials, right? In a way, if the supplier would have approached the bank on its own, it would have costed him, say, X percent. Now he's getting the funds at, say, X minus Y percent. So in a way, it is lowering his cost of funds, right? Now, if you take a step back and look at what, and just compare with what the central banks do when they lower interest rates, right? I think this product is exactly doing the same thing. So if you look at it and compare it with the effect that that lowering of interest rates gives on the whole financial ecosystem, I think supply chain finance does exactly the same. So to answer your question, I think supply chain financing is just a fantastic tool going ahead. In fact, it's even better than just lowering interest rates, because here, first of all, in most of the cases, you can just do a sort of an off-balance sheet financing. So while lowering an interest rate would still keep some debt on your balance sheet, this product keeps your balance sheet free as well. So your original capacity to take debt or whatever debt you had with any other bank remains there. Besides, this is just a truly an extra liquidity. So I think it's a very relevant product, especially in the current context. It definitely helps a lot to the financial ecosystem. It's something that is free to try, as Abhishek as well highlighted. There's nothing holding back on you from going ahead and trying. So I think it definitely supports the whole financial ecosystem, if you talk.
No, thanks for that. Asif, here's maybe a bit of an odd question for some people, because technology has a lot to do with this particular solution. But is it possible to implement supply chain finance without some kind of a digital platform?
Yeah, I'll follow the time, and I'll simply answer it's no. The reason being, the world, Brian, the world is moving towards platform economies. Today, Amazon, YouTube, Facebook, these are not platforms, these are economies in itself. So unless otherwise you will digitize this, the entire traction which we have been able to get, the entire mandate which collectively the ambassadors sitting in front of you today in this panel are talking about, is only and only possible if you have a digital platform. Otherwise, you will be dumped under doing the KYCs, you'll be dumped under documentation, you'll be dumped under handling small value invoices. Today, digitally, you can handle an invoice which might be 500 dirham to a 5 million dirham. But otherwise, if it is not digital, you cannot do it. The entire proposition, the getting the assignments perfected, getting the complete KYC carried out, getting the refresher of KYCs, getting the app in which you are stitching together the buyer, the supplier, and the bank together. If it will be without a digital platform, it's simply a nightmare. It's just will be a technology. It will just be a product in papers, but it will never see the sunlight. So I believe the key aspect of success of supply chain finance is that it should be a very, very strong digital proposition which can give you a go-to-market proposition.
Okay. I'm conscious of time, so I'm gonna switch over to questions which have come in from the audience. And the first one, I'm going to direct this at you, Ashish, but please, everyone else, chip in if you've got an insight on this. But how quickly, once you've agreed that you want to do supply chain finance, how quickly can you actually implement this?
Again, a very interesting question and very relevant as well, I would say. Uh, See, I think most of the time, especially in this part of the world where supply chain financing is a bit new, the way it kicks off is the bank enlightens the customers. I would say customers here, which would be the customers to the bank as well to the suppliers. So I would use the terminology customer, supplier, and bank. So if you look at it, most of the time the bank approaches the customer and enlightens them on what this product is. The customer says, yes, it's very good. I mean, it's no cost. We should definitely be trying. But then what's next, right? So that is where I think the tricky part of doing it as soon as possible and the concerns related to that kicks in, right? So what happens? I mean, the for example, banks talk to me as a part of Treasury. The Treasury then communicates it to the procurement team. Procurement team is enlightened. Okay, very good. Then procurement teams needs to contact the suppliers. And where will they go? They will go to their top few suppliers, right? Maybe the top supplier is in a good is already having good financial support. He doesn't need it. He will try the second best supplier, then the third best, maybe the top 10 suppliers. And that is where maybe we'll get 2 or 3 successes. Maybe we'll not get any successes. And again, when you are talking to a supplier, the supplier has again someone who is talking to the procurement team. He needs to convince his finance team and all the business people to be onboarded on the program. So you see, I mean, there are a lot of legs involved here. Obviously, banks do their best in trying to bridge the gap and making everyone, bringing everyone on page to understand understand the nuances of this program. But I think where it gets lost is after those top 10, top 20 suppliers, when you go towards the tail, where I think 80% of your suppliers reside and maybe a significant volume of your supplies as well, that is where I think the banks also don't find it very economical. The customers also lose interest because they are very small suppliers. But that is where I think the gold lies. I mean, that is where I think the program is most attractive. So I think to answer that question, I think it all depends on how digitally advanced the platform is, how easy it is to onboard the supplier, to make everyone understand the benefit. Everything that we have been talking about here, all the benefits that it has, it should be readily available and up for grab to the SMEs. I mean, the platform should provide that feature upfront, so that, I mean, whatever platform it is, I mean, 10 minutes to onboard, 5 minutes to get the invoices encashed. So I think that digital platform and
in the interest of time
would go a long way.
I will compliment Ashish. The key thing is how easy and user-friendly platform you offer to onboard suppliers. That's where the devil is in detail. I think digital platforms are key for this success. That's why the last question was taken care. Over to Brian.
Okay. Yeah, we have, Atif, I'm going to throw this at you. We're very limited on time, so it's a long question, but if you can get a quick answer, it'd be great. Yeah. The question is, supply chain financing is a welcome idea stroke gift for suppliers. How do we see large companies adopting this product proposition, using their borrowing powers to fund their suppliers?
Yeah, I think the short answer is that we have talked about the social responsibility for large corporates. We have talked about the unlocking liquidity for large corporates. We have talked about that, you know, it is complementing the supply chain management for large corporates. So all these things, when you put together, I think along with that, the balance sheet management for large corporates, I think there will be a lot of accelerated embracement of this particular technique.
Yeah, and I'd actually just add to that. My experience is that, you know, this might be fairly new in the Middle East, but you've had the benefit of seeing what people in other parts of the world have done, which hasn't always been right. Yeah, and therefore you get the benefit to learn from their mistakes and to be able to do it right first time round, which I think will be important. No, thank you very much for that, gentlemen. That was really insightful. And hopefully our audience got something out of that in terms of learning about supply chain finance and how important it's probably going to be in the region in the years to come. Just some closing housekeeping points. Firstly, in terms of social media, please do get engaged with the ACT, either using the Twitter handle ACT Update or the hashtag ACT Middle East. You can watch this session on demand afterwards and keep on chatting as well. So thank you very much, everybody, and thank you for all your contributions.
Thank you
so much,
Brian,
Brian.
Yusuf, Abhishek, and Ashish. God bless you all. Thank you.
Good day, Yusuf and Ashish.